Strong growth in the Indian economy in the fourth quarter of FY18, perhaps setting the stage for an economy where the growth inflation mix changes in FY19, growth remaining relatively steady and inflation becoming a bigger concern as compared to growth. But let's look at the Q4 numbers before we get to that. You got 7.7% growth in GDP in the fourth quarter of the year. That was better than the revised 7% growth in the third quarter, and it was at the higher end of estimates that economists had put out. The median expectation from economists was 7.4%, but the upper end of the range was 7.8%, so it's closer to the upper end than the lower end. If you look at GVA, and those who track GVA will look at this number, 7.6% growth in the fourth quarter compared to 6.6% in the third quarter of the year. Look at the sectoral data to see what the structure of the economy is looking like, and there are certain particularly employment-intensive segments which are starting to look healthier. Manufacturing grew at 9.1%, strong growth, and has picked up over the last 3 quarters or so. The base is slightly subdued compared to what we saw in fourth quarter of FY17, but still 9.1% growth in manufacturing is considered to be a good number. Construction saw very strong growth of 11.5%, but there was a significant base effect which helped the year-on-year growth numbers. It is also believed that construction is benefiting more from government spending than private spending, but be that as it may, construction sector activity is looking quite strong. Farm sector at 4.5% growth was also strong, although it was pointed out to us by Pranab Sen, former chief statistician of the country, that this is the output growth, so don't take this number and say that all is well with the rural economy. There are price issues in the rural economy which still need to be tackled, but still 4.5% growth in output terms on the farm sector is strong. GDP day, always look at the expenditure side numbers, and the expenditure side numbers are telling you that the investment economy is looking healthier. 14% growth in gross fixed capital formation. That number is telling you that both government and private investment is picking up. Now, to what extent is that still skewed in favor of government investment? That remains to be seen. Private final consumption expenditure grew at 6.6%. That's at par with what we have seen over the last few quarters, but perhaps that element needs to pick up a little bit more, particularly if the rural consumption piece sees acceleration in FY19. Government spending has been strong, and that continues to be the case, at least in the fourth quarter of FY18. With all these numbers now done, this is the last input that will go into the MPC's meeting next week. If growth is recovering as per expectations and is getting closer to trend, then perhaps the MPC will feel more comfortable shifting focus towards inflation and starting the process of tightening monetary policy, but that decision comes in next week.